If you are collecting Social Security right now, or if you plan to start collecting soon, there is something happening in 2026 that you need to understand. This is not a rumor. This is not speculation. The Social Security Administration has confirmed changes that will affect millions of Americans this year. Some of these changes will put more money in your pocket. Others might catch you off guard if you are not prepared. And here is the thing most people do not realize. These updates do not just affect retirees. They affect anyone over 60, anyone on disability, surviving spouses, and even some green card holders who have worked in this country. So if any of that sounds like you or someone you love, I need you to stay with me for the next few minutes. What I am about to share could make a real difference in your financial life this year. Let me start with the big picture. Every single year, the Social Security Administration reviews the program and makes adjustments. They do this because the cost of living changes. Prices go up. Groceries cost more. Gas costs more. Medical care costs more. And Social Security is designed to help you keep up with those rising costs. That is why you hear about something called the COLA. COLA stands for Cost of Living Adjustment. It is the percentage increase that gets added to your monthly benefit check each year. Now, in 2026, the Social Security Administration has confirmed the COLA for this year, and I want to be very clear about what this means for you. This adjustment is not a bonus. It is not a gift. It is an automatic increase that is built into the system to help your benefits keep pace with inflation. But here is what many seniors do not understand. The COLA percentage changes every year. Some years it is higher, some years it is lower, and the amount you actually receive depends on several factors, including what you were already receiving and when you started collecting. So the first thing I want you to know is that your benefit amount in 2026 will be different from what it was last year. For most people, it will be a little bit higher. But how much higher depends on your personal situation, and that is exactly what we are going to break down together. Now let me explain how this COLA actually works in plain terms. The Social Security Administration looks at something called the Consumer Price Index. This is a measurement that tracks how much everyday things cost. Things like food, housing, transportation, and medical care. When those prices go up, the Consumer Price Index goes up. And when the Consumer Price Index goes up, Social Security benefits go up too. The goal is to make sure that your buying power stays roughly the same from year to year. So if bread costs more this year than it did last year, your Social Security check should help cover that difference. That is the idea behind the COLA. Now for 2026, the confirmed COLA increase is in line with recent inflation trends. This means most beneficiaries will see a modest increase in their monthly payments. I want to be honest with you here. This increase may not feel like a lot. It might be $20 more. It might be $50 more. It depends on your current benefit level, but every dollar counts when you are living on a fixed income. And this is money you are entitled to. You earned it. So make sure you understand what you are getting and check your statements to confirm the new amount is correct. Now, let me talk about who exactly is affected by these 2026 updates. And this is important because many people assume Social Security is only for retirees. That is not true. Social Security covers several different groups of people. First, there are retirement benefits. These go to people who have worked and paid into the system for at least 10 years. If you are 62 or older and you have enough work credits, you can collect retirement benefits. Second, there are disability benefits. These go to people who cannot work because of a serious medical condition. If you are receiving Social Security Disability Insurance, also called SSDI, the 2026 changes apply to you too. Third, there are survivor benefits. These go to widows, widowers, and sometimes children of workers who have passed away. If you are receiving survivor benefits, your payments are also subject to the COLA adjustment. Fourth, there are supplemental security income benefits, also called SSI. This program helps people who are aged, blind, or disabled, and who have very limited income and resources. SSI is a little different from regular Social Security, but it also gets adjusted each year. So whether you are a retiree, a disabled worker, a surviving spouse, or someone receiving SSI, these 2026 updates could affect your monthly income. And that is why I want you to pay close attention to everything I am sharing with you today. Now, here is something that catches a lot of people by surprise. Your full retirement age might not be what you think it is. Many seniors assume that 65 is the magic number. They think that once they turn 65, they automatically get their full Social Security benefit. But that is actually not true anymore. The full retirement age has been gradually increasing for years. And in 2026, the full retirement age for most people is 67. That means if you were born in 1960 or later, you need to wait until age 67 to collect your full benefit. If you start collecting earlier, say at 62, your benefit will be permanently reduced. And I do mean permanently. That reduction does not go away when you turn 67. It stays with you for the rest of your life. Now, I am not saying you should never collect early. Sometimes it makes sense depending on your health, your finances, and your personal situation. But I want you to make that decision with full knowledge of the consequences. Too many seniors start collecting early without realizing how much money they are leaving on the table. So before you make any decisions, take a moment to look up your full retirement age. You can find this information on the Social Security Administration website, or you can call them directly. Just make sure you know what you are signing up for. Now, let me explain something called the earnings test. This is another area where many seniors get confused. If you are collecting Social Security but you are still working, there is a limit to how much you can earn before it starts affecting your benefits. This is called the earnings test, and in 2026, the earnings limits have been updated. Here is how it works. If you are under your full retirement age and you are collecting Social Security, you can earn up to a certain amount without any penalty. But if you earn more than that limit, Social Security will temporarily reduce your benefits. They do this by withholding $1 for every $2 you earn above the limit. Now, this does not mean you lose that money forever. Once you reach full retirement age, Social Security recalculates your benefit and gives you credit for the months when your benefits were reduced. But in the meantime, it can feel like you are being penalized for working. And that can be frustrating if you were not expecting it. So if you are planning to work while collecting Social Security, make sure you understand the earnings limits for 2026. This is especially important if you are self-employed or if your income varies from month to month. The last thing you want is a surprise reduction in your benefits. Now I need to talk about something that often gets overlooked, and that is the connection between Social Security and Medicare. Many seniors do not realize that their Medicare premiums are automatically deducted from their Social Security checks. So when your Social Security benefit goes up because of the COLA, your Medicare premium might also go up. And sometimes those two things cancel each other out. You might get a COLA increase of $40, but then your Medicare premium goes up by $30, so your actual take-home increase is only $10. This is frustrating, I know. But it is the reality of how the system works. In 2026, Medicare Part B premiums have also been adjusted. And for some seniors, especially those with higher incomes, the premiums are even higher. There is something called IRMA, which stands for Income-Related Monthly Adjustment Amount. If your income is above a certain level, you pay more for Medicare, and that higher premium comes right out of your Social Security check. So when you are looking at your 2026 benefits, do not just look at the COLA increase. Look at the whole picture. Look at what Medicare is taking out. Look at what you are actually receiving in your bank account each month. That is the number that really matters. Now, let me spend a moment on Supplemental Security Income, or SSI. This is a program that helps some of the most vulnerable Americans. If you are over 65, or if you are blind or disabled, and if you have very limited income and resources, you might qualify for SSI. In 2026, the SSI payment amounts have also been updated. The maximum federal benefit rate has increased to reflect the cost of living adjustment. This means eligible individuals and couples will receive slightly higher monthly payments. But here is what many people do not know. SSI has very strict rules about income and resources. If you have too much money in your bank account, you could lose your benefits. If you receive money from family members, it could count as income and reduce your payment. These rules can be confusing and sometimes unfair. But they are the rules, and you need to understand them. If you are on SSI or if you are thinking about applying, I strongly encourage you to speak with someone at the Social Security Administration. Ask questions, make sure you understand what is expected of you, and keep careful records of your income and resources. This can protect you from problems down the road. So what should you actually do with all of this information? Let me give you some practical steps you can take right now. First, check your Social Security statement. You can do this online by creating an account at the Social Security Administration website. Your statement will show you your current benefit amount, your earnings history, and your estimated future benefits. Look at this carefully. Make sure everything is accurate. If you see any errors, report them immediately. Second, review your Medicare costs. Look at your Part B premium. Look at any Part D prescription drug coverage you have. Make sure you understand what is being deducted from your Social Security check each month. If you are paying more than you expected, find out why. Third, understand your tax situation. Many seniors do not realize that Social Security benefits can be taxable. If your total income is above a certain level, you might owe federal taxes on part of your benefits. This is especially true if you have other sources of income, like pensions, investments, or retirement account withdrawals. Talk to a tax professional if you are unsure. Fourth, keep your records organized. Save your Social Security statements, save your Medicare notices, save your tax returns. Having these documents handy can help you resolve problems quickly if something goes wrong. And fifth, stay informed. The rules around Social Security and Medicare change regularly. What was true last year might not be true this year. Make it a habit to check for updates at least once a year. Before I wrap up, I want to warn you about some common mistakes that seniors make. These mistakes can cost you money and cause unnecessary stress. The first mistake is not checking your earnings record. Your Social Security benefit is based on your highest 35 years of earnings. If there are errors in your earnings record, your benefit could be lower than it should be. Check your record and report any mistakes. The second mistake is claiming benefits too early without understanding the consequences. As I mentioned earlier, if you claim before your full retirement age, your benefit is permanently reduced. Make sure you understand the trade-offs before you decide. The third mistake is ignoring the earnings test. If you are working while collecting benefits, know the limits. Do not be surprised by a reduction in your check. The fourth mistake is falling for scams. Unfortunately, there are people out there who try to take advantage of seniors. They might call you pretending to be from the Social Security Administration. They might ask for your personal information or threaten you with arrest. Please know that the real Social Security Administration will never threaten you over the phone. They will never demand immediate payment. If you get a suspicious call, hang up. Do not give out any information. You can report scams to the Social Security Administration directly. The fifth mistake is not asking for help when you need it. The Social Security system is complicated. There is no shame in asking questions. Call the Social Security Administration. Visit a local office. Talk to a trusted advisor. Get the help you need to make good decisions. I also want to mention something for those of you who are green card holders. If you are a lawful permanent resident and you have worked in the United States, you may be eligible for Social Security benefits. The rules are the same as for citizens. You need to have at least 40 work credits, which is roughly 10 years of work, and you need to meet the age requirements. However, there are some special considerations. If you leave the United States for extended periods, your benefits might be affected. If you are receiving SSI, there are even stricter rules about being outside the country. So if you are a green card holder who is thinking about traveling or moving abroad, make sure you understand how it will affect your benefits. Talk to the Social Security Administration before you make any decisions. And keep records of your travel just in case any questions come up later. I know I have shared a lot of information with you today, and I know it can feel overwhelming. But here is what I want you to remember. Social Security is your money. You worked for it. You paid into the system. And you deserve to receive every dollar you are entitled to. The 2026 updates are real. They are happening now. And they affect millions of Americans just like you. So take the time to understand what has changed. Check your statements, ask questions, and make sure you are getting the benefits you deserve. Stay calm, stay informed, and take care of yourself. This is your future we are talking about, and it matters.